actually, there was a pretty serious change in trend during the Yellen Fed that Powell has continued on, where if you're going to signal, you signal in a speech at the New York Economics Club and you go through your arguments. You don't signal in the Humphrey Hawkins testimony or in congressional testimony in general. And he's been very, paid a lot of deference to the committee and the process. And so this early in his chairmanship, I doubt very much that he would pre-commit the committee to a decision in July. There's also quite a bit of really important data between now and then. You know, I think, one, the consumers come back very strongly. Mike just cited how strong those stocks have been, but you could see it in the core retail sales numbers. They collapsed in the wake of the QT stock market crash late last year, early this year, but now core retail sales are running at 9% per year. We're likely to have very strong consumption in Q2. That comes out right before GDP. Probably the inflation prints will be fine, but you're also likely to see the manufacturing surveys strengthening through the course of the month as well. So by the time we get to July 31st, the case may have weakened significantly on the economic side to actually do it. So why would he give away all that optionality?
There's almost too much time between now and then.
I feel like, Tom, you are not a fan of this idea of the Fed cutting rates in this kind of economy. Do you feel like your case has been made even stronger in the last few weeks?
I think that the reason why my case has been made stronger is because it continues to be politicized to an even greater extent. It's hard to make objective decisions when the Fed is politicized. No president wants to see higher rates. We want the Fed to not be politicized so that really smart economists are making long-term decisions, half a generation out in time, a full generation out in time. So, yes, I have even more concern.
Monetary policy is never a half a generation type decision. It's maybe not a monthly or quarterly decision, but it's a 5-year decision, perhaps.
Or in this case, a year and a half
Fine.
decision.
But it's never that long term.
Well, it should be. It should be half a generation, an economic cycle. I mean, right now, I'm on the front lines looking at what is the practical implication. I'm looking at deals. These private companies are levered 5, 6, 7, 8, 9 times cash flow as a business I looked at a couple of weeks ago. Right now, that's fine. And we keep lowering rates, it'll just keep going higher and higher. My concern is if there's a sudden shock, you see rates double, all of a sudden those coverage ratios look terrible, and we could have a real problem in our hands.
So, Mike, what would the market do if Powell somehow puts the easing case in doubt tomorrow? We just had a strong jobs report. We have a stock market at a record high.
Yeah.
I mean, what if he puts a dent in that?
If he really is seen as explicitly pushing back against this implied 100% chance the bond market says has of a rate cut, I do think the market would have a little bit of a gut check. If he says we stand ready to act as appropriate, essentially reiterate what they said after the June meeting, then that's probably leaves us where we are. I mean, no guarantee, but also not trying explicitly to pull something away from the market.